Today I'm going to look at the highest yielding money market funds. When I say money market funds, I'm not talking about money market accounts. Please press that like button, share, and subscribe. Money market accounts are typically what you get with the bank account like Ally Bank and some others. These are money market funds. Basically, they're like mutual funds that are sold through financial firms and brokerages. So the first one is Vanguard Federal Money Market Fund, VMFXX. It has a low 0.11% expense ratio and a high 5.26% SEC yield. Now this yield is after the fees, so the fees are already reduced, so quite high. And the great thing about this account, you can get in for less than $3,000. This $3,000 is if you buy the mutual fund on its own. You can open the brokerage account for nothing and then put in a very small amount of money, way less than this, and still get this high rate. The next one, the default swap account. One of the three choices for the swap account that Fidelity has is the Fidelity Treasury Money Market Fund, FZFXX. It has a 7-day yield of 4.97%. It has a 0.42% fee. And the other option they have for the sweep account is SPAXX, Fidelity Government Money Market Fund. It has the same 4.97% 7-day yield and a 0.42% fee. This one is mostly treasuries just like the other one. The third option that Fidelity provides is the FDIC insured account, which pays much less, which pays 2.72%, but it's FDIC insured, which is better, but the rate is much lower. Now, Charles Schwab does have a sweep account, and it's an FDIC insured sweep account, but it only pays 0.45%. Not very good for Schwab. Now T.Rowe Price, I haven't talked much about T.Rowe Price in the past. T.Rowe Price has two options available. Now you can open a T.Rowe Price brokerage account for $2,500 for the taxable and $1,000 if it's an IRA. Now this one is the U.S. Treasury Money Fund. It's got $14 billion in assets under management. This one has a 5.08% APY. The U.S. Treasury Money Fund has a 0.31% expense ratio. The other option that T.Rowe Price provides is the Government Money Fund. It has a 10.6 billion assets under management. It has a 5.04% 7-day yield and a 0.31% expense ratio. eTrade provides two options for the sweep account, at least under my account. The two options that eTrade provides, at least for my account, it's the cash balance program interest rate or the extended insurance sweep deposit account. The rates for the cash balance program interest rate are anywhere from 0.01 to 0.15%, so really low. The extended insurance sweep program pay basically the same low rate, 0.01 to 0.15%. So really low rates for eTrade. Robinhood even pays more than what eTrade pays. Robinhood will pay 1.5% APY. This is with their free account. If you sign up with the paid account, then it's 4.9% for Robinhood Gold. Now T.Rowe Price does allow checks to be written from the settlement account, but it's not a full-featured checking account like Fidelity has. For example, the check writing on the sweep account has a $500 minimum per check. Unlike Fidelity, T.Rowe Price doesn't have a debit or ATM card available for the sweep account from what I can tell. Now, Vanguard has more options available than the default sweep account, this one right here. There's also one that pays a slightly higher rate of 5.27%. It has a slightly lower fee, and that is the Vanguard Cash Reserves Federal Money Market Fund, Admiral Shares. And now this one, if you were to invest in this one, you actually have to have the investment minimum of $3,000. This one you cannot change to the default sweep account. Another option available is the Vanguard Treasury Money Market Fund, VUSXX. It has a lower 5.17% and a low 0.09% fee. This one is treasuries only. This one is more conservative. It invests primarily in U.S. Treasury securities. If we look at the portfolio for this one, it only has 27 holdings and compared to, I think the other one was 145. It does have repurchase agreements, which are typically done with banks, but Vanguard uses the New York Fed for the repurchase agreement, so it doesn't get much safer than that. Here we can see the repurchase agreements. The repurchase agreements for this Vanguard fund is the Federal Reserve Bank of New York, so really safe. Now Charles Schwab, despite paying only 0.45% on their sweep account, they do have some money market funds available. They do have some money market funds available that pay a much higher interest rate, but unfortunately, you'll have to buy them on their own. So for example, the prime money funds they have, these are government and corporate. So the rate is going to be a little bit higher than the government only ones. So the Charles Schwab Value Advantage pays 5.21%. It does have some corporate debt from financial companies, and we know there may be some loan defaults in the future, so this may not be a good one. So if we look at the government and treasury money market funds, we have several options available. Now I'm not going to pay attention to this video is for everyday investors. So if you have more than $1 million, there's probably other videos for that, or you probably have a financial advisor. So I'm going to focus on the ones that are, $5,000 or less, let's say. The Schwab government money fund pays 5.05% APY. This one has a 0.34% expense ratio, 18 billion of assets under management for this one. The great thing about Schwab is this one has no minimum investment amount. One that I like even more is the Schwab Treasury Obligations Money Fund Investor Shares. It pays 5.07% APY. Now I like this one better because it's more focused on treasuries and it pays a higher yield. Net expense ratio 0.34%. Average maturity 9 days. There's also one that's even more conservative. This one is U.S. Treasury Money Fund Investor Shares, SNSXX. It only pays 4.99% on this, so it pays a little bit less. Now, I believe this one is only treasuries, no repurchase agreements. 4.99%, 0.34% fee. Average maturity 33 days. For this one, we can see that it's all U.S. Treasury debt. There's no repurchase agreements. So this one is ultra conservative. Now, Fidelity does have several other money market funds available, but actually after reducing the minimum investment down to $2,500 or less, the list goes all the way down to 4. So the 4 government-only Fidelity money market accounts that are available, 2 of them are already the default option. So you have the Fidelity Treasury Money Market Fund, FZFXX, and you have the Fidelity Government Money Market Fund, SPAX, SPAXX. The difference in yield between these two and this one here, there's only like a 0.01%. This one here pays, I think, 0.01% more. This one has a 7-day yield of 4.97%. So not much of a difference. And this one you have to buy on its own. So it'd be a lot more work. Whereas the other two are automatically set up as the default sweep option. The other option to choose from is the Fidelity Treasury Only Money Market Fund. This one is treasuries only. So the yield is probably going to be slightly lower, 4.91%. This one would be the least riskiest out of all of them, but it pays a slightly lower yield. And it has a 0.42% expense ratio. Now this one, like the other one, this one has no minimum invest amount. So you could invest with, $1, $25, $1,000. Other than money market mutual funds, there are also bond ETFs that have similar performance when compared to money market funds. I'm going to compare some of them here. These are all ETFs from various companies such as Vanguard, iShares, Schwab. The great thing about ETFs is they can be purchased from any brokerage, unlike mutual funds. They have a duration anywhere from 0 years all the way up to 2.6 years. When I put in the year-to-date price return, you'll see that the black one here is Vanguard USB. VUSB, this is the Vanguard Ultra Short Bond ETF. It has a duration of 0.9 years, and you'll see that the price goes up and down quite a bit on this one. Another one that jumped up and then it went down, you can see here in the light green at the bottom of the screen here on the right. It's SCHO, Schwab Bond ETF. It has a duration of 1.9 years. So it's one of the longer terms, and you can see that the price went down, the year to date went down about -1%. And then the one that you see here that dipped quite a bit, this is a floating rate corporate bond, FLOT. It's considered riskier. That's when Silicon Valley Bank collapsed, it went down quite a bit. Now let's change it to the total return. So when we do the total return now, the highest return is the one here in red, FLOT. This is the floating rate corporate bond. Now it went down quite a bit in March, and then it went all the way up. The total return was about 4%. FLOT has a expense ratio of 0.15%, a 5.86% yield, and a duration of 0.02 years. Now the worst performers were the 2 longest term ones. That's why I'm still very hesitant to own anything long term. I don't want the risk if the Fed changes the rates quickly again. I don't want the risk. I don't want the risk of the long term ones because I don't know what the rates are going to do. But we have the black one, which is BSV. It has an expense ratio of 0.04%. 4.87% APY, and a 2.6 year maturity date. So this is the longest one. The second longest one is the Schwab SCHO. It has a really low expense ratio of 0.03%, a 4.93% yield, and a 1.9 average duration. The next one that we have that's probably the next one the next longest one is the one here in blue right above it. It's the next worst performer. It's the Vanguard Ultra Short Bond. It returned around 2.63%. Now this one has a 0.10% expense ratio, a 5.41% annual percentage yield, and a 0.9 effective duration. Then when we look at the top, other than the floating rate, when we look at the next three top performers, we have the one here in orange. SGOV was the winner at 3.37%. SGOV has a fairly low 0.07% expense ratio, a 5.37% APY, and a 0.09% years duration. The next one below that was USFR, Wisdom Tree, United States floating rate. It has a 0.15% expense ratio, a 5.29% annual percentage yield, and a 0.02 years duration. So it has one of the shortest durations. And the one after that is TFLO. Now TFLO has had dividend payments that are a little bit more erratic than USFR, so sometimes the price may be higher or lower at times. This TFLO has a 0.15% expense ratio, a 5.21% annual percentage yield, and a duration of 0. So that's pretty much it. When you start looking at some of the other ones, they didn't do quite as well. So I'm still a big fan of SGOV, TFLO, and USFR. Okay, so what about the M1 Finance sweep options? Well, they have two options. They have a paid option that's $10 a month or $95 a year. This one pays up to, M1 Finance pays up to 5% APY on their paid sweep account options. That's with the M1 Plus members. For those that don't pay the fee, everyone else gets a only 1.5% annual percentage yield. So not the best on that, but it's still better than eTrade. Now I did find one that's better. I did find one that has a pretty competitive rate. Webull has a 5% annual percentage yield FDIC insured cash management account option. Now this one doesn't require any fees. There's no fees. Not like Robinhood or M1 Finance, there's no fees for this one. No minimums, no fees. Here we can read about the cash management account options. Cash management is a service provided by Webull that allows eligible clients to earn interest each day on free cash balances in their brokerage accounts. So this isn't a standalone thing. This is linked to the brokerage account. The interest is accrued daily and paid the 15th of every month. Are there any fees? No. Webull does not charge any fees for cash management. Are there any minimum balance requirements? No. There are no minimum balance requirements, and it's FDIC insured, so that's better than SIPC. So this is the best FDIC insured account I've seen linked to a brokerage account. Now this is protected up to $250,000 per program bank, $1 million total. There's no limit on how many times you can withdraw from the cash management. How much is TD Ameritrade paying for their sweep account options? Ameritrade was acquired by Schwab recently, so this data, as you can see here, this was from January, so on their website, it's out of date. It's showing 0.35%. Actually, Schwab is paying 0.45%. So the rate that they pay for their sweep account is 0.45%. And that's for all balances. Okay, what about Merrill Lynch? How much are they paying? Actually, I believe they changed their name now. It looks like they're going by the name Merrill. August 15th, less than $250,000, 0.01%. Now, they do have one called the Preferred Deposit right here. Preferred Deposit 5.02. Now, the preferred deposit is a non-sweep product, and it requires at least $100,000. So this one's out of the question also because it's not a sweep if you have to manually do stuff. They do have some mutual funds, as you can see here, but the little 6 here that you see for each of these, this means it's a non-sweep product. So this means it's not going to be automatic. You'd have to buy these manually. So from what I can tell here, it's basically 0.01%. 0.01%, so that's like nothing. What about Interactive Brokers? How much do they pay? This is a broker that traders have used, and this is the most complicated one that I've seen. So it says how much interest is your broker paying you right here, and it shows Interactive Brokers 4.83%. They do have a nice breakdown here where they show how little each of these companies is paying. eTrade 0.01, JP Morgan 0.02, Schwab 0.45, TD Ameritrade 0.35. Well, I think it's 0.45 now, but Wells Fargo 1%. Now it's showing 4.83%, but that's not exactly accurate. if you have more than $10,000, 4.83%. And this would be if you have the Pro version. If you've got the Lite version, it's 3.83. But it goes further than that, so there's actually more to it than that. So as far as I can tell, they only pay if the cash balance is greater than $10,000. For example, right here, this is somebody who has a portfolio that's worth $300,000. So all the stocks and stuff, all the stocks and assets, it's worth $300,000. Now, even if they have the first $10,000 in the account of cash, they pay zero. So you actually literally have to have more than $10,000 of cash just sitting there before they'll actually pay you, from what I can understand. Above the cutoff, you can see here, then you get the 4.83% for this example. Even if you have $1 million, it's the same deal. The first 10,000, they pay nothing. And it's made more clear right here. It says accounts with net asset value of 100,000 or more are paid interest at the full rate. So if you have less than 100,000 in assets, then you're going to get a lower rate. Accounts of net asset value less than 100,000 receive a lower interest rate. There will be no interest rate paid on the first 10,000 of cash. So this one is very complicated, and I don't like it at all. Okay, how much does First Trade pay for their sweep account? So if we scroll down past the margin rates, FDIC insured deposit rates, 0.45%. So even if you have over $1 million, 0.45%. So not so good. Okay, now here we have Wealthfront self-investing account. Now I have an account with them. I bought some stock here, Western Alliance, when it went down quite a bit. The way the Wealthfront Invest account works is you would transfer over something like $300 to buy this, for example. Let's say you want to buy $300 of Western Alliance. You put in that you want to buy $300 worth of Western Alliance, and then fairly quickly it'll place a market order and try to use up all of the shares and then do fractional shares for the additional. But in some cases there's some leftover amounts. So the leftover amount, like for example this one here, or dividends that come in, will get stuck in this sort of pod. This is not invested in the FDIC insured Wealthfront cash account. It's invested in the TIMXX money market. Now what's the TIMX? Here you can see right here. Why is there extra cash held in my stock investing account? Excess funds are left over after purchase or sale of investment. You receive dividends. The cash is held in a money market fund, TIMX. So what is TIMX? TIMX is from RBC, also known as the Royal Bank of Canada. It's the US government money market fund. This is institutional class, so you get the best rates. We look at this, there's a 0.27 expense ratio, and the current annual 7-day annual percentage yield is 5.13%. So not too bad. And the nice thing is, since you're going through Wealthfront, you don't have to worry about this $1 million minimum investment. Okay, what about Tasty Trade? How much do they pay? They pay a whopping 0.01%. Now, I actually had to email them to get this information, so you just have to take my word for it. 0.01%. And they're going through Apex Clearing, and they pay only 0.01%, so not very good. How much does Alpaca pay for their sweep account? Alpaca is an API-based broker. They actually pay zero. They pay nothing. Alpaca pays nothing for their sweep account. I actually had to email to find out, so not very good. All right, what about SoFi Invest? How much does SoFi Invest pay? They pay a low 0.01%. 0.01%, and that's not even FDIC insured. Like a lot of smaller brokers, they're using Apex Clearing, and Apex Clearing seems to pay only 0.01%. So when I emailed, they said it's 0.01%. So not very good. Okay, how much does Ally Self-Directed Trading pay on their sweep account? Zero. Zero commissions, but also zero interest. So you're getting nothing with this account. I emailed them, and you can't get any worse than zero. But the customer service person I talked to said that you can transfer the money between your Ally bank account, your Ally savings account, or your Ally money market account. But their savings is still not at 5%, and their money market is still not at 5%. So 4.4% is the highest rate they have right now. So if you get a dividend payment that appears in the account and you want to have it automatically invested, you'd have to manually move this to the money market account each time and get this lower rate. So I definitely don't like this one at all. The next one is Moomoo Financial, which is a Singapore-based broker. They're licensed to do business in the US and other countries also. Okay, so how much does Moomoo pay? Moomoo pays only 0.03%, so not very much. I was a little bit excited over finding out that Webull offered a 5.0% FDIC insured cash management account with their brokerage account. And so I signed up today and deposited a little bit of money, but I did find out that the cash management account is not as good as what I thought it would be. I figured that this 5%, this would be like a savings account where you could do bill pay and so forth, but it's not. So I contacted Webull customer service and they said that there's no account number or routing number for cash management. So that means you're not going to be able to use it for bill pay. So basically, if you want to do bill pay, you won't be able to use Webull as a one-stop shop like you can with Fidelity. And also there's no ATM or debit card like Fidelity has. I think right now for brokerages, Fidelity is still probably number one, mostly because of the features they have that no one else has. For example, the Fidelity brokerage account, you can have bill pay. You can have bill pay where you can pay your bills. You could pay a utility bill. You could pay a credit card bill. Name another brokerage account where you can do that. And if you don't want to use the bill pay portal, you can sign up for check writing services and you can get the routing number and the account number. You can get the routing number and the account number and bill pay directly from the website of the vendor in question. And you're also getting a fairly high rate. You're getting with the SPAXX, the Fidelity Government Money Market Fund, you're getting almost 5%, 4.97. So you're still getting probably 0.3% less than what you would with Vanguard, with the top Vanguard fund, or with a FDIC insured high yield savings account like the Wealthfront Cash account or the Marcus high yield savings account. Those pay about 5.3, but all these features you're getting, and just for a small amount of difference, it definitely seems worthwhile. Now, Fidelity doesn't have reoccurring investments with ETFs and stocks like Webull has and a lot of brokerages have. You can only do reoccurring investments with Fidelity through a mutual fund. So who's the winner after looking at all these money market funds? Vanguard is still the winner for the highest 7-day SEC yield and the lowest fees. And if you get in through the brokerage account, you don't have to do the $3,000 minimum. And you're opening the door to all the other great Vanguard funds and ETFs that are available. And Vanguard is owned by investors. So in theory, they have your interest in mind versus companies like Fidelity and Schwab, which are not owned by investors. Fidelity is still very, very good. They're very competitive. They have features that no one else has, like the bill pay. Fidelity is still very competitive. They have a high 4.97% 7-day yield. It's not the highest, but when you factor in the fact that they have bill pay, debit card, check writing, it really puts Fidelity in a league of their own. Now, comparing Fidelity to Schwab, as the interest rates go higher and higher, Charles Schwab is falling behind. Charles Schwab, their rates are not going up high enough. 0.45% is just not competitive anymore. And so I see Charles Schwab falling behind. Although I like the Charles Schwab interface, I don't see this as a competitive option right now. The same goes with eTrade by Morgan Stanley. The rates are just pitiful. The rates are really, really bad. And if you get dividends coming in all the time like I have, and you're lazy, you're trying to live your life, the money goes in, and if you're not reinvesting it, you want to get the highest interest rate. And this is just not the option for that. This is going to be a lot of work that you have to do. And as far as the ETFs go, my options are pretty much the same. Although now I would probably say SGOV is probably the one to go with, because SGOV, the performance has been improving. And I think with the lower expense ratio of 0.07 versus 0.15 for TFLO or USFR, but all three of these are going to be safe. If you need to store your money in a money market ETF, this is, I think, the way to go. And that's basically what I've been doing. Thanks for watching this video. Please make sure to like, share, and subscribe. Thanks a lot. If you have $5,000 that you're looking to park for 90 days, I have a deal for you. So I have a referral with Raisin. You can sign up with any of their products. So for example, their high yield savings account that they have, the highest rate right now is 5.26%. Now, when you factor the $25 bonus that you'll get with my link, the annualized rate, all you have to do is keep the $5,000 there for 90 days. The annualized rate basically becomes 2% higher. So this will be 7.26% when you keep it there for 90 days. This rate always goes up when the Fed increases the rate. Or you could sign up with their high yield CD. If you sign up for the 12-month CD with the $5,000, this will become 6.01% when you factor in the bonus. So check for my link in the description. Also, if you're looking for a bank account, there's a very easy $30 sign up bonus with Vero Bank. All you have to do is sign up. Once you get the debit card, spend $20 on the debit card. Typically the next day the $30 will appear in your account, so pretty easy. Also, I have a Discover IT referral. You get double points the first year. No annual fee. So the 5% categories become 10% categories. You get $50 with the first purchase. So very easy. There's no spending requirement. So you could go to the dollar store, make one purchase with this card, you get $50. Even if you have the Discover More card, you'll likely be approved for this one, Discover IT. So check for my link in the description.